Welcome back, everybody. Here at Mitram, we bring you educational videos and information from the world of finance. I am Anil Sanghi. How you can get the benefit from the TCS buyback is what we are going to talk to you about. So let's get started.
So let us understand what is a buyback. Some very important points about a buyback. In a buyback, a public limited company buys back its own shares from the existing shareholders. There are two methods for the buyback. One is called as a tender offer and another is when a company buys back shares from the secondary market, which is through an exchange. In a buyback, if the offer is through a tender offer, retail investors have a reservation of 15% of the buyback size. And a retail investor is somebody who's holding less than 2 lakh rupees worth of shares in the company. So let's understand what is that TCS buyback has to offer to you. So TCS is the number one IT company in India. It has a market cap of 1.4 lakh crore rupees. It has excellent management, track record. It is one of the best companies from the Tata Group, high integrity in terms of management, high performance in all spheres, very good profitability. It is a great company. So TCS, as a method of rewarding its existing shareholders, has come out with a buyback of 4 crore equity shares, and it is going to buy back this shares at rupees 4,500 per share. The total size is 18,000 crores. And this buyback is through a tender offer, which means it is going to buy from an existing shareholder and not through the secondary market. A retail shareholder will have a reservation of 15% in this buyback, which works out to be 60 lakh shares or an amount of 2.7k crore rupees. As I said, a retail shareholder has 15% reservation. So a retail shareholder will be somebody who has holding of less than rupees 2 lakh worth of shares. The next important thing to understand is the record date. The record date is 23rd of February for this particular buyback, which means if you hold the shares as on the 23rd of February and your name appears in the books of the company, then you will be eligible for the buyback. Now, does it mean I cannot buy shares from the market today? Of course, you can buy the shares. You can buy these shares till 21st of February. If you buy the shares on or before 21st of February, which is Monday, you will be eligible to offer these shares to the company at rupees 4,500 per share. Now let us look and understand how can you make money in this particular buyback. So I have taken an example of 4 shares. The reason is the smaller the number, the easier for us to understand this whole model. And the market price as at the end of 14th February was 3,733 rupees. So let us say some individual X, they buy 4 shares on the 14th of February. The investment would work out to be 14,932 rupees per share. At what price will they render this share to the company? They will give it back to the company at 4,500 rupees per share. And there is another concept called acceptance ratio. An acceptance ratio is how many shares have been accepted by the company from the shares that you have offered to the company. How this is calculated is, let us say, right now we know that 60 lakh shares will be accepted by the company. So if there are more than 60 lakh shares being offered, company will accept in a proportionate manner. So if let us say the 80 lakh shares are offered, for every 4 shares which are offered, it will accept 3 shares. Now there is a specific reason why I'm saying the acceptance ratio at 75%, why I'm taking that at 75%. That's an assumption. It may or may not work out. However, there is a reason why I'm taking that assumption. I'll give you the reasons. However, understand it's an assumption. It may not work out to be 75. It can be any other number. Right? So at a 75% acceptance ratio, 3 shares will be bought at 13,500 rupees in total. And the 1 share which has not been bought back, I'm assuming it will remain at 3,733 rupees. I don't believe TCS shares, to lose its value. However, it can happen. However, again, this is an assumption. So the total cash value that you will receive if you sell that 1 share also is 17,233 rupees. You made an investment of 14,932 rupees, which works out to be a profit of 2,301 rupees and a return on investment of 15.4% in approximately 1 month or so, depending on when TCS decides to open the buyback and renders the money to you. However, this is something closer. It is between 30 days to 45 days at max. So next thing to understand is how many shares can I buy to remain a retail shareholder. The maximum you can buy is 44 shares. On a per share basis, this works out to be 575 rupees per share. So if you buy 4 shares, it will be 2,301 rupees. If you buy 10 shares, it will be 5,750 rupees approximately. Similarly, you can do math with various numbers. You can just multiply 575 with say 22, 44 or whatever number you decide to buy. Right? It gives you a very simple model to work out any number that you wish to buy. But ensure that as a retail shareholder, you do not buy more than 44 shares. And another important thing is that you may assume that I have multiple accounts. In terms of you might have account with HDFC Securities or Zerodha, ICICI Securities. Put together in all the accounts, you should not have more than 44 shares in total. And let me also explain why did I take the assumption of 75% acceptance ratio. The reason is last time in December 2020, TCS had come out with a buyback and the ratio at that time was 100%. I also looked at the retail shareholding at that time versus today. The retail shareholding has not increased a lot. It has increased from 3.35% of the company's holding to 3.65% as of today or as of December 21. At the same time, the current buyback size is 1.08% of the equity capital versus 1.42% in December 2020. So looking at these factors, I believe that 75% acceptance ratio is a reasonable number. So this is how you can make 15% return. Now, in addition to this, you can also advise your family members, your friends to do this. Every individual can do this. You should also advise some of the people who work for us, our employees. Even if they can invest smaller amount, they can also get some benefits. So go ahead and help them. I'll also talk to you about taxation. So whenever we make money, we have to pay tax. However, so what is the tax that I have to pay in a buyback? Let's understand that. Luckily, in a buyback, it is the company which pays the tax, and as an investor, I don't pay any tax at all. Doesn't it sound great? So go ahead. You have a great potential to make a tax-free return of 15%. I'm sure you liked the video today. So don't forget to like, subscribe, and click the bell icon so that you can get notified whenever I bring such useful information to you. Thank you so much for giving me your valuable time. Have a great